Hello, welcome to my YouTube channel. This is Louis Trades, and today I'm going to introduce to you a very interesting topic, which is Forex trading. Some of you have heard about it. I've heard about trading this, trading that. So I'm going to introduce that very topic to you. So Forex trading is a global marketplace where currencies are bought and sold against each other. It's a marketplace where currencies like the euro. I know that most of you know about currencies, which is the euro, which is the yen, which is the dollar. So it's basically buying and selling of currencies. So in this market, $7.5 trillion are traded every single day in this market. They're traded every single day, which means there is lots and lots of money to be made in this particular market. This market is open 5 days a week, which means it's open from Monday to Friday. So you can literally trade from Monday to Friday like how you want. Also, there are 170 pairs available for trading. So the next question is, who trades Forex? The guys who trade Forex are the central banks. They control the monetary policy. They are the largest movers of the markets, like the Fed, like the ECB, like the BOB, which means the Bank of England. And also the other guys who control the financial markets, who trade in the financial markets. They are the commercial banks, who handle client transactions and speculative trading, like the JP Morgans and the others. And also the other group that trades are the corporations. They convert currencies for international trade and hedge exposure. And also the hedge funds that do speculative trading with massive capital and complex strategies. And also individuals who are the retail traders, who access the market through online brokers with leverage. Leverage is a topic that we're going to learn as we go forward in this series. Also, the governments buy and sell to maintain economic stability and foreign reserves. How does Forex work? Forex, as I said below, is basically buying and selling of Forex currency, referred as to currency pairs. Some examples like the Euro USD, the GBP USD, the USD yen. So these pairs are paired in the base currency and the quote currency. So the base currency is on the left side and the quote currency is on the right side. So you pick a direction, and if you think the base currency is going to rise, then you can buy. Or if you think that the quote currency is going to rise, you can sell. And vice versa, which is if you think the base currency is going to fall, you can sell. And if you think the quote currency is going to rise, you can buy. Set your size. What's setting your size? So we set our sizes in trading through using lot sizes. How do we use lot sizes? Lot sizes is something that you're going to learn as we go forward. And also the next topic is open and manage your position. So like when we press buy on the chart or we press sell on the chart, we have to set levels where we expect price to take us out. If we know we are going to lose, always say if we know we are going to make money, then you must also set levels where we know price is going to hit if we have made money in the markets. Close and collect. So exit the trade. Your profit or loss is calculated automatically if you're in the markets. So there are market sessions in the market, but not all hours are equal. There are active spikes in the market when major sessions overlap. So some examples of the market sessions are the Sydney session, which runs from 10 p.m. to 7 a.m. GMT. And the best pairs to trade in this pair is the Audi USD, which means it's the Aussie versus the dollar, or the NZD USD, which is the New Zealand dollar versus the dollar. So like volume during this period of the market session is typically very, very low. It doesn't really spike like the other sessions. And the second session is the Tokyo session, which runs from 12 a.m. to 9 a.m. GMT. And the best pairs to trade during the session is the USD JPY, the Euro JPY. The USD JPY is typically the US dollar, and the yen. And the Euro JPY is the euro versus the yen. So volume during this period, during the Tokyo session, is kind of medium. You can get some good movements during this session. But we go on to the next, which is the London session, which runs from 8 a.m. to 5 p.m. And the best pairs during this session are the Euro USD, are the GBP USD, and also the others. and volume during this session is very, very high. This is the session that most retail traders trade. Most traders trade during the session, during the London session. And also lastly, the New York session, which runs from 1 p.m. to 10 p.m. GMT. And also the best pairs to trade during this time is the Euro USD, the USD card, and also other pairs, because this session is very, very volatile. So price tends to move well during this session and moves mostly during this session. So the London and the New York overlap are from 1 p.m. to 5 p.m. GMT, which equals to the highest volatility and the best opportunities to trade during this time. So the London and the New York are the best sessions to trade. They're the best sessions. They're the best sessions that make the most money. And also they're one of the sessions that I've used to also make the profits that I've made. Currency pairs. Because now I know like most of you have been asking yourselves about currency pairs. So this guy is saying currency pairs, this Euro USD. So currency pairs are basically, so like they basically explain like this, they're basically categorized like this. So let's use an example of Euro USD. So the currency on the left is the base currency, the currency you are buying or selling, and the currency on the right is the quote currency, the currency that you're comparing against the currency that you're buying or selling. That's why it's Euro USD, because you're buying or selling the euro and you're comparing it against the dollar. So the major pairs, they are the most traded pairs. So in the currency pairs we have the majors, the minor, the exotics. So the majors are the most traded pairs. They have low spreads. So like most of you asking like what are spreads? Spread is the difference between the buying price and the selling price of a currency pair. It's like a small fee you pay before entering a trade. So that's the meaning of a spread. The majors like Euro USD, like GBP USD, like Audi USD, they're the most traded pairs, and also they have low spreads, and also they are very, very good for beginners. So the minors have slightly wider spreads, but also they have very, very good movements, like the GBP JPY, like the Euro JPY, and also others. The exotics are emerging market currencies, high spreads, high risk. So the exotics, they don't really move very, very well as pairs. And also they're very, very high risk. So I don't really advise you as beginners to trade exotics because they don't move well, and also they're very, very high risk. Because like most traders trade the majors, the Euro USD, the GBP USD, the USD JPY, and also maybe like the GBP JPY. So I advise most traders personally to trade the GBP JPY, the Euro USD, the GBP USD, and also the others. Why should retail traders participate in this market? First of all, you can start with low capital. You can start with as low as $100. You can start with as low as $10. So like many brokers, what are Forex brokers, or what are brokers? Forex brokers are companies that connect you to the foreign exchange market so that you can buy and sell pairs. So they're basically companies where you can put your money and then you start trading with them and then you start working with them. So typically those are Forex brokers. So some Forex brokers can accept you to start with $10, with $20, with $100. So typically you can start with low capital, but also it is very, very important that you learn the skill first before putting in your money. Even though it's $10, even though it's $20, even though it's $50. With the Forex market, you can profit in both directions. Whether you predict the market is going to go to the upside, you can still profit. Whether you can predict that the market is going to sell, you can still profit. So you can profit anyway. No commissions on major pairs. So most brokers earn from the spread, no direct commission. So it helps us as retail traders to trade and make money on these brokers easily. And also you can trade from anywhere. All you need is a laptop or a phone, no office, no exchange floor, no boss. So like you can set your own time to trade. and then you can trade in that time. And also flexible hours. So the markets literally open like 24 hours, 5 hours a week. So it means that you can trade from Monday to Friday. So you can literally set your own time to trade, whether you want to trade at night, whether at daytime, whether any time you want to trade. So it depends on what you want to trade. So skill you can build. So trading is a very, very profitable skill that you can build from. It takes time, but if you put dedication and work into that skill set, you can still make a lot of money from that skill set. So unlike gambling, like Forex rewards studied, disciplined, and rule-based traders. So let's talk about the beginner myths. The first myth is most people think that trading is a get-rich-quick scheme. Profitable trading requires months of study and practice and discipline, and it also takes time. You have to be really, really dedicated to do the work and put in the work and to study and to understand the strategies and everything that really work. And also the second myth that people think you need a lot of money to start. So as I said at the beginning, you can start with brokers like literally at $10, $20. You don't need a lot of money to start. Also the third myth is that people think that successful traders never lose. Trading, people are going to always lose in trading. You're going to win, but also you're going to also lose as a trader, because it's part of the process. So you have to understand that losing is part of the game. Winning is also part of the game. So even pros that have been in the game, this game of trading for a very, very long period of time, lose 40 to 50% of trades. So profits come from proper risk management and also understanding something called risk to reward. Also, most people think that signals and bots will do the work for you. No, they don't do the work for you. You have to put in time and effort into learning how to trade. You cannot skip the process while rushing to bots and everything. So you have to learn and understand and put in the work, and also the time and effort into learning the skill set. So like, what did we learn today? We learned that Forex is a 7.5 trillion day global currency market. It also operates 24 hours, 5 times a week across the Sydney, Tokyo, London, and New York. Currencies are traded in pairs, which is the base versus the quote currency. There are majors, minors, and exotics with different risk profiles. Retail traders access the market through licensed brokers. Profitability requires skill, discipline, and risk management. So that's it for today. And the next lesson we are going to cover Forex brokers. How can you choose a Forex broker? A regulated versus an unregulated broker. Also key broker features. And also how can you open a demo account? And also the red flags to avoid in Forex brokers.